John Erlichman is with me now because he sat down with Dan Lufkin. This is a great interview.
Yeah.
Founder of Donaldson Lufkin Jenrette, or DLJ for short. And he told you basically, if you want to be successful in business right now, come up with an iPhone app, right?
Go out to Silicon Valley. Look, we know the new Wall Street has big firms, the survivors, Deirdre, and it has some small firms that are hoping to grab some market share while the big guys are dazed and confused. Now, Lufkin is a guy who founded a company that routinely would fight above its weight class, grabbed some market share, and then was eventually purchased by Credit Suisse for $11.5 billion. But I asked him, could you create a DLJ today? And he sounded a little skeptical. Let's hear what he had to say.
I think it would have been much more difficult, and I wouldn't bet my last dollar that it would be able to make the progress and the headway that we made at that time. You've got to remember one thing, which most people don't pay attention to. But when we formed DLJ, we had one major advantage. Fixed commissions went away in 1975. We formed DLJ in 1960. So we had 15 years of basically a fixed, controlled pricing structure within our market. And that gives you an awful lot of opportunity to make mistakes. That you can make mistakes and not be killed. Today, I don't think you can make too many mistakes and not get killed.
And we hear all the big Wall Street firms talking about the regulatory headaches, but at the same time, you've got mid-sized firms like Jefferies and Company, that are in the headlines because they're hiring. They are hiring traders. They are hiring people for their research teams. Is Jefferies a kind of company that could be the next DLJ, for example?
Well, Jefferies not too small. Jefferies is a fairly major trading operation that's fairly specific business. And that trading world has been very, very active and to some degree successful in this last environment. So yes, I think Jefferies should be very successful. Do you start a new Jefferies today? Much more difficult.
What about hedge funds that have gotten into more traditional Wall Street businesses? Citadel's a firm that gets a lot of attention for its push to move into more traditional Wall Street businesses. If you start as a hedge fund and move into things like investment banking and brokerage, etc., can you be successful today?
I think so, very much so. I don't think that'd be my first choice, but I think you definitely could be.
Why wouldn't it be your first choice?
Because I don't think that's the area with the most opportunities on the table at the moment.
Where are the areas where the most opportunities?
Well, someone once said to me, I'm going back 50 years, that if you want to make money and you don't have any money, and we didn't have any money when we started, we borrowed our money, you go into real estate, you go into film, you go into an area where you are paid either through leverage or through creativity and make big bucks. That area today, which is brand new in the last 10 years, is the internet. And you see the young firms, the so-called app firms, which are dynamite in terms of their value creation on relatively small investment.
So the new Wall Street is out in Silicon Valley.
Well, the new opportunity, if you're talking about Wall Street or hedge fund investing with it, that certainly is a big area. So if you're talking individuals going into business, that's Silicon Valley. You're absolutely right.